Welcome back, looters. I am your host on Tick to Loot, the channel where we turn ticks into treasure. Today we are on Lesson 9.9 of Unit 9, Technical Indicators. In this lesson, we're going to cover volume indicators and how they can help you make informed trading decisions. From understanding volume to using the on-balance volume, OBEV, indicator, and volume profile, we'll cover it all. By the end of this video, you'll know how to use volume indicators to confirm breakouts and identify potential reversals. Let's get into it. So what is volume? Simply put, volume is the number of units traded in a given period. It shows how much activity is behind a price move. Think of it like a busy street. If a lot of people are walking in one direction, it's likely that the street is popular and the movement is strong. But if only a few people are walking in that direction, it might not be as popular or sustainable. In trading, high volume on a move indicates strong conviction, while low volume on a move indicates weak conviction. For example, let's say we're looking at a chart of the euro to US dollar currency pair. If we see a strong bullish candle with high volume, it's likely that the move is driven by a large number of traders and is therefore more sustainable. On the other hand, if we see a bearish candle with low volume, it might not be as convincing, and the move might not be sustainable. It's worth noting that true volume data is unavailable in spot Forex. What we see in our charts is actually tick volume, which is a proxy for true volume. This means that the volume data we're looking at might not be entirely accurate, but can still be useful for making trading decisions. Now, let's talk about the on-balance volume, OBEV, indicator. OBEV is a running total of volume, where volume is added on up days and subtracted on down days. This indicator can help us confirm the strength of a trend or identify potential reversals. For example, if the price is rising and OBEV is also rising, it's a bullish confirmation. On the other hand, if the price is falling and OBEV is also falling, it's a bearish confirmation. For instance, let's say we're looking at a chart of the US dollar to Japanese yen currency pair. If we see the price rising and OBEV also rising, it's a strong confirmation of the uptrend. This means that the price move is driven by a large number of traders and is therefore more sustainable. Now, let's talk about OBEV divergence. This occurs when the price makes a new high, but OBEV does not. This is a potential reversal warning, as it suggests that the price move is not driven by a large number of traders and might not be sustainable. For example, if we see the price making a new high, but OBEV not making a new high, it's a sign that the uptrend might be weakening. Another useful tool is the volume profile. This shows the volume traded at each price level, helping us identify high-activity price zones. Think of it like a heat map, where the areas with the most activity are the most important. By looking at the volume profile, we can see where the most trading activity is taking place and make more informed decisions. For example, let's say we're looking at a chart of the pound sterling to US dollar currency pair. If we see a high activity price zone around the 1.3000 level, it's likely that this level will act as support or resistance in the future. By knowing where the most trading activity is taking place, we can make more informed decisions about where to enter or exit trades. So, how can we use volume indicators in our trading? One practical use is to confirm breakouts. If we see a breakout on low volume, it's likely that the move will not be sustainable. On the other hand, if we see a breakout on high volume, it's a stronger confirmation of a move. By using volume indicators, we can make more informed decisions about where to enter or exit trades. To summarize, volume indicators can help us make informed trading decisions by showing us the activity behind a price move. By using the on-balance volume, OBEV, indicator, and volume profile, we can confirm the strength of a trend, identify potential reversals, and make more informed decisions about where to enter or exit trades. Remember, volume is a powerful tool that can help you turn ticks into treasure. That is everything for Lesson 9.9, Volume Indicators. If this helped you, smash that like button and subscribe to Tick to Loot so you never miss a lesson. Drop a comment below. What was the most useful thing you learned today? See you in the next lesson, looters. Keep turning those ticks into treasure.